Alright, welcome back to my channel. And guys, this is one of the video you're gonna be watching. And on this video, you're gonna be understanding why I took some of the trade I actually took on my October set and forget challenge. And remember on my last video that I posted, I promised you guys that I'm not only gonna be just showing you the trade that I took, but I'm also going to be explaining to you why I took those trades. And it's important so you can learn for yourself and you can take this knowledge to the market and look for perfect or sniper entries like the one I'm about to show you. And let's dive into the video. So first, guys, for you to cut proper entry, all right, uh, most of the entry that I've taken on this challenge are from the change of market structure or reversal strategy that I used. All right. And that is what I want to explain on this video. First, you need to understand market structure. And if you've not understood market structure, this is going to be a bit difficult for you. And one thing I want you to know is I recorded a video on market structure, so you can go and watch the video. The link will be below this video. You will see it here on my YouTube channel. So it's a 22 minutes video that explains market structure in depth. And when you watch that video, trust me, you're going to be learning something. So I would like you to give me feedback if you learned something from this video, and drop your comment section because that is going to help the algorithm on YouTube to push the video to more people that are struggling in the forex market to actually learn the same thing that you are learning here for free. Now, let's go into the chart. All right. So on our market structure video, we talked about the higher low and higher high, higher low, higher high, higher low. That will explain that the market do not just move in a single line like a lot of videos you see that talks about market structure, just giving you a series of a higher high, then a higher low, and a higher high, a higher low, higher high. So I was able to tell you guys that the market do not move in this direction, that the market actually move leaving what we call internal liquidity and external liquidity, or external structure and internal structure. All right. And I was able to explain to you that the way the market actually move is something like this. We have price created a low and broke structure to the upside, leaving us some pullback, which is the internal structure, and created a higher low again and broke structure to the up. All right, taking out this very high that we have here and create another higher high. Now after we create another higher high, this higher low will now become our lower point that we are expecting price not to break if this trend is going to continue to become a bullish trend. And notice what happened when price traded to create a new higher high. We have pullback again, all right, and price traded all the way back to this level but failed to break below this higher low that created that higher high, which is our external liquidity, external structure. And price creates all this pullback. Getting to this level, what do we see? We saw a reversal again on the internal structure, and price what broke the structure again to give us another higher high. And on this level, we say this is our break of structure, which is BOS. So that's why I said if you've not watched that video, go and watch the video. It's going to actually help you understand this break of structure. All right. So we said that when price is moving in a series of higher high, higher lows, higher high, higher low, we consider this to be an uptrend. All right. And that being said, what are we actually going to be learning today? We are going to be learning the reversal, which some of the trade I actually took on this challenge. I took them from the reversal point or the shift of market structure from a bullish market to a bearish or a downtrend market. All right. Now notice what happened at this level here. We noticed that price was coming up. All right. And we were having a low. All right. And we saw price broke structure to the up to give us another higher high. All right. But when we get to this level, we saw something different. Price reacted from that level, all right, giving us something like this. Okay, and we came back, went, and what do we see? We saw price give us something like this, and we broke below this structure. Notice this very low, all right, that price traded below was the low that created this overall high that we have here, which is our last higher high. And this point was our higher low at that particular time. And we said that for this market to continue to become an uptrend, price will need to trade above these higher high points that we have, all right, as it has been doing before. Remember, when we traded and we have a higher low, we created a higher high, price pulled back to give us a higher low, but failed to trade below the previous higher low. Instead, we traded above the higher high, which was this one, and we created a new higher high. But now notice what happened at this level. At this level, when we have this lower, higher low, we created a higher high, but price traded, instead of traded to this level and continue to trade above this level like we've seen it, instead price got to this level, and what do we see? We see price traded below the higher low to give us what we consider as a lower low. All right, give us what we consider as a lower low. And whenever we see this happen in the market, we can now safe to say that we have a change of market structure. A change of market structure. All right, so we are saying that the uptrend that we have before has now become a downtrend. All right, market structure. So we have what we call a change of market structure. That means the bullish market that we once have, that was known as uptrend, all right, has become a downtrend, become a bearish market or downtrend. All right, I hope you are learning. Okay, so now once we have this, we know that the uptrend that we have, which is what happened around this level, has automatically what changed from the uptrend, and we are now looking for opportunity to trade this market to the downside. Now there's something that you need to pay attention to. Most reversal, all right, happen at a specific zone in the market, which are majorly previous resistance level or previous high in the market structure, which I'm going to show you guys when I go into the chart. All right, so market reversal do not just happen in just anywhere. Sometimes they happen at major levels. So you as a trader need to position yourself at that specific key levels to wait and see if price will give you a reversal pattern. Now once you see this kind of market shift that created a low like this, what you should be expecting to do as a trader is to look for the next opportunity to trade this market to the downside. So what do you expect? We have our higher high and our lower low. You expect price to trade to this level, maybe around somewhere here, all right, which is pull back and create a low, go back and take out this low that was created, use it as liquidity, all right, and price will react from there to create something like this, pull back to somewhere here, and what do we see? We're going to see a shift to the downside. Sometimes happen this way and we can see something like this breaking structure to the downside. All right, now notice at this point this was our lower low that has been taken out again to give us another lower low. So we can then mark this high that was created that failed to trade above our higher high to be our lower high. All right, and this want to be our new lower low. All right, can you guys see that? So you understanding that when we have a reversal in the market, price is always going to give us some level of pullback, create some form of liquidity. We're going to be talking about liquidity in our future videos. All right, so we can understand the terms in case I have to use it a lot in my videos, you will understand this. So I'm going to create a video on that. Create this, and when we see this happen, we can take a sell and maybe enter a possible sell entry from this level or even this level. So in this case now, when you want to take a sell trade, you just have to look for your sell opportunity around somewhere here. What is happening? I don't know, maybe because it's not on a chart, so I will just have to leave that. So we'll look for a sell opportunity, target this low to go, then we have our good trade setup. All right, so now you understanding this shift of market structure and how to use it to form an entry in the forex market can be an edge. All right, for example, we saw how the price was trading at this level, created a higher high, then came back, went up, failed to take out this higher high. But what do we see? We see price traded below our higher low to create a lower low for us. All right, create a lower low for us. All right, and once this happens, what I'm trying to teach you now is you as a trader need to now position yourself for the market to give you a certain level of pullback to this level, which is above maybe 50%, which we are going to be also dealing with in our further videos about discount and premium zone. So that is one of the reasons you need to actually stick to this channel, subscribe so you won't miss videos that I'm going to be posting in futures, explaining a lot of the terms I'm going to be using in most of my videos. All right, so you just have to allow price to pull back to this level, look for a perfect sell entry. Your stop loss will be around somewhere above this high, then your take profit will be below this level to target a further downtrend movement. Now with this in mind already, I would like to take you to the chart and show you some of the trade that I took. Now another thing I want you to know before we go to the chart is most of the time when market is bullish, all right, this could just be a pullback that we want to trade to correct the price to maybe a discount zone, then continue the trade upward again. Now something happens most of the time. For you to actually know that this pullback sometimes is valid, this bullish market will need to happen in minimum of 5 to 6 or 7 days. All right, so if we're going to number these movements, we can say here was day 1. All right, here was day 1, and here we can say day 2, because we are having each box here. I put this box here on purpose so it will mark a certain date. All right, so from year to year was 13 days movement, from year to year was 30-day movement, here to year 30 days. So each of the bars are in daily movements of the market. All right, so we say day 1, day 2, then we can say this is day 3, we can say this is day 4, all right, and we can also say this is day 5. Now sometimes this movement happen from day 1 to day 5, or day 1 to day 6 or 7, Then from that particular period, we will now see some sort of market reversal or correction. So this is like day 6, and on day 7 we actually saw the shift of market structure on day 7. So sometimes it happens like this in the forex market, that price will be going in a certain direction, either downtrend for a certain period of days of like from 1 to 5 or 1 to 6 or 7. Then after that kind of consistency in one direction, price will tend to reverse and do some pullback to correct the price to a certain discount or premium level before price will not continue to the upside again or downside again. So knowing this now, you need to actually wait as a trader to see if this bullish movement that is happening happen for a minimum of 5 or 6 days, or 4, 5 to 6 days. That is what is majorly common on the chart. We have it to move 4, 5, 6, 7 days. So you can see a particular trend going in a certain direction for 4 to 5, 6 days. After that, you may see some sort of market reverse or shift of market structure that you can take advantage on and cut a perfect entry as a trader. All right. So knowing or understanding shift of market structure, this can actually help you to what make a very beautiful trade decision. All right. So this is the reversal pattern for a bullish trend turning to a bearish trend. All right. And I'm going to also be showing you on my next video a reversal pattern from a bearish trend to a bullish trend. So let's go into the chart and let me show you some of the trade I was able to use this strategy to take. So this is one of the trade I caught on this challenge, and I promised to share with you guys why I took this trade. Now remember, we were having a series of what? A lower low, a higher high, a higher low. All right. A higher low, this was another higher low. All right, we have a higher high, and notice what happened. We created a low at this level, which was our higher low. All right, but what happened? We saw how price created that higher high, but came back. Instead of the price to continue upward, price failed to continue to create another higher high. Instead, we have equals higher high. Then what do we see? We saw a price what give us a lower low. All right, this was where the shift of market structure actually happened on this particular pair. Now if we should count the days, notice day 1, day 2, day 3, day 4, day 5, day 6. This was around day 7 that we saw the shift of market structure around this level. Notice we have each box representing 1 day movement of the market. All right, like I've already explained on the previous chart that we just used as an illustration. But now we saw how market shift from this bullish movement into a bearish movement. All right, and what do I do? When I saw this shift, this was where I was supposed to actually target my first entry on this trade. But simply because I missed this particular trade, I actually entered the trade at this level, knowing fully well that this trend will move for a period of 4 to 5 days again before we may continue the bullish movement, and that is what is actually already happening here. Now if we catch these days, now we have a reversal trend around this level. So we can say this is our day 1, day 2, day 3, day 4, notice it, and this is day 5. So what are we seeing at day 5, day 6? We saw market giving us some form of shift, because if you guys have been following me on this trade, I told you guys that when we have a market shift, which is what is happening here at the moment. Now let me show you guys. We're having a shift of market structure here again to the bullish side. Now what do I mean? The video may be long, but the knowledge you're going to be gaining from this video is going to help you a lot as a trader to form an amazing decision or catch a sniper entry in this market. Now what do we see here? We saw how price gave us a lower high at this level, and we broke structure to take out this low to create what? Another lower low. All right, we'll create another lower low around this level. So let me mark that so we can have a line there. All right, now after this whole lower low, price gave us a new higher lower high here, which is this one. So if I happen to mark, it will be this particular line here, because that is where the price got to here. And after this one, we created another what? Lower low. Okay, now notice we created another lower high here. Can you guys see that? And price came to create more like an equal low, but it was not really equal, because if I should move this, you will see that price actually traded below this very low. All right, and went back to almost equal this one, then trade back but failed to go below this very low that we have here. Now what do we see? We see price went back, came back, and we broke structure. Now for a trade like this is already shift of market structure for me. And if you count the days again, we see that the market go down or went bearish for almost 5 days, and the 6 days we are seeing a reversal change on this market. So in a trading condition like this, what will I need to wait for? I will just have to wait for price to come back to this level. All right, taking out this liquidity here, giving me a change of market structure again, retest, and I will take my buy to also target this high, because we are bullish on this trend, and this whole movement you see here was actually what? A pullback, correcting the market so we can go further to the high that the overall trend is. So even analyzing this alone, I've seen another entry that I'll be waiting for to give me a very good opportunity to actually make money again. So I can just put this here and do this. You see now, and my stop loss will be below these lows. All right, below these lows, and I will do 1 to 2. But will I want to just take this short trade like this? Sometimes I expand my stop loss, so in case market want to use all these lows as liquidity, because it's very possible price can just flash in, reject back into this level again, and continue to trade. So this is what I will do for this kind of trade. All right, I will do 1 to 2, targeting this level here, because if price could break this level here, the next level price will be coming is around somewhere here before we may have any other pullback. All right, so I will do 1 to 2 on the trade like this and see what happens. So can you guys see that? So this is how you can actually cash sniper entry using the change of market structure or reversal strategy, following market structure the right way. So I hope you learned something from this video. I want to show you another pair that I actually took trade with using the same model, which is this particular trade. You see how price was coming day 1, day 2, day 3, day 4, day 5, day 6, day 7. Then we saw a shift of market structure. This was the low that created a high, and price went what? Broke it, pulled back to this level again. After we break it, came back, and you saw this beautiful setup happen here. So if you were to take this trade before that we came into the market early, this was supposed to be our first entry, and stop loss just around above this level. All right, and you do 1 to 2, this would have been a sniper entry as well. You see that? And after this low was created, we saw how price went back again, and this is where we took the next trade that we take, expecting price to trade below this level to create another lows for us. And we saw how price went in profit but pushed back, and I'm still holding this particular trade, as you guys can see. But this would have been my best entry the moment this reversal condition happens here. I would have taken this kind of trade, all right, and have a sweet profit. And also maybe when price give me the second opportunity, I would have taken another trade, which is this one I'm currently at. So I hope you learned something from this video. Follow me for more videos like this. Share my page with your friends that are struggling with the forex market and how to cash proper entry in the forex market. So I believe you must have learned something from this video, how you can use change of market structure or reversal strategy to make a proper trading decision and cash sniper entry in the forex market. So do well to subscribe. If you love my video, leave comments. Leave your comments in the section if you learn something from this video, and subscribe. See you guys. Have a wonderful time.